Hello, everyone. Welcome to the 21 Hats podcast. I'm your host, Lauren Feldman. Pricing a service business sounds straightforward until you actually have to do it. How much should you charge? What's reasonable? And what happens when reasonable isn't enough to keep the business healthy? This week, Sarah Segal walks David C. Barnett and Liz Picarazzi through how she thinks about pricing her PR services, why she aims for consistency across clients, and why she resists charging based on what the market will bear, but insists on building enough margin to stay profitable. It's a balancing act between values and reality, and not always a comfortable one. The conversation gets into practical questions every business eventually faces. Do you raise prices a little every year, or wait until you're forced to raise them more than just a little? Do you price based on your costs or your customers' perceived value? And how do you handle those conversations without damaging relationships you genuinely care about? Plus, Liz expects a tariff refund, but she isn't counting on it to help very much. She also explains why she's stopped flying employees around the country for installations. Even in good times, owning and running a business can be a lonely pursuit. Our hope is that these weekly conversations will let owners know they are not alone in facing challenges. In fact, that's the whole idea behind the 21 Hats community, engaging with other owners to get the kinds of insight only another owner can offer. If you're interested in learning more, you can sign up for the Morning Report newsletter, which offers examples every day of owners confronting challenges and seizing opportunities. Just search the 21 Hats Morning Report to subscribe. Joining me this week on the podcast are David C. Barnett, who's based in New Brunswick, Canada, and helps people buy and sell businesses. Liz Picarazzi, who is CEO of CityBin, which makes trash enclosures and package bins and is based in Brooklyn, New York. And Sarah Segal, CEO of Segal Communications, a public relations firm based in San Francisco. The episode is titled, Are You Pricing for Your Clients or for Your Business? Before we get started, this episode is brought to you by Grasshopper Bank, a full-service digital bank that, unlike a lot of banks, really wants to work with small businesses. Please meet Chris Tremont, Grasshopper's Chief Digital Officer. I asked Chris whether Grasshopper, as a digital bank, had been able to make the process of applying for an SBA loan any less cumbersome. Here's his answer.
Grasshopper has been a part of the SBA lending program for the last 4 or 5 years. We're actually a preferred lender with the SBA, so that can actually help us decision deals a little bit faster and get business owners the money they need quicker. Over the last 2 years, we've taken what's a fairly cumbersome process to get it approved for an SBA loan. At the end of the day, it still is offered in partnership with the government, so there's a lot of paperwork involved. What we've done over the last couple of years as a preferred SBA lender, or at least the 7A loan program, is to help digitize or streamline at least the front end of the application process. So a business owner can go to our website or partner with some of the digital brokers that we work with who actually provide your information digitally versus having to walk into a bank branch and bring stacks and stacks of papers, or having to locate documents and take a couple hours uploading documents. So we've made it easy to get the process started. It's digital, and then you can kind of move through it quicker, where, like I mentioned earlier, we have sort of the human element where there are SBA trained professionals inside the organization that will also call you or email or available to talk to help shepherd you through the process. So we've had some great success with that over the last couple of years, and we've helped welcome hundreds of new small businesses to the bank, providing credit through that program.
As long as there have been businesses and banks, I think business owners have been told that it's really important to try to develop a personal relationship with your banker so that they know who you are and they're there for you when you need them. Obviously, that's not what you're emphasizing. You're emphasizing a digital relationship. What are the advantages of banking with a digital bank that you would highlight?
So part of our mission or our value proposition is that we put ourselves, the bank, where the business owner or the founder already lives today. And so by providing those digital tools, meaning you can actually get started with a business banking account with us through an application process that takes less than 10 minutes. So in 10 or 15 minutes, you could have a bank account, be up and running, setting up your vendors or people for making payments, invoicing, getting money in, right? That speed is certainly a value proposition or something that we tout. The convenience of using these tools makes it easier to do your banking. Like we say, business owners need to get money in, they got to get money out, they got to understand cash flow and then get on with their day. And so that's another thing that we promote heavily is that you can spend less time banking and more time running your business when you work with us. But there is still the human element as needed with the bank. So I think that's important to note that we have a leading edge client services team available across a number of different channels.
And now, on to the episode. Welcome, Dave, Liz, and Sarah. It's great to have all of you here. I want to start with you, Sarah. There's a lot of uncertainty in the world right now, and much of it is pushing businesses in the direction of raising their prices. But of course, that's not always an easy thing to do. You recently reworked your billing rates. What exactly prompted that?
That's always a good question. So with most agency models, we log our hours for any given client. So each team member is in a system that we use where we line item what their billable rate is. And every time they log an hour, it basically goes towards the retainer that we charge the client. And when we work with a client, there's usually kind of I use the 3-month rule where I'm not going to call them up and be like, hey, give us more money if like 1 month that we're over servicing them. I usually look at like 3 months. And so if there's a consistent trend of like, okay, you're giving us too much stuff for the amount of money that you're paying for us, let us know. But in the same sentence there, I also work really hard to make sure that my senior most people, who are my most expensive people, are not doing the things that junior people should be doing. So we went through and kind of reworked our billable rates. And there's a classic structure you look at. You look at kind of what you pay the person and their benefits. You look at your overhead on a monthly basis of what, all those tools and services that you use to keep your doors open. And then you add in your profitability. So agency standard profitability it's always nice to be around 20%. When I'm looking at billable rates, I'm looking at person's salary, their payroll taxes, what we're paying in for their HSA, if we're doing a match to their 401k, all of those details. And I'm literally going through and quantifying that. But the billable rate that we determine is not based on the person, it's based on their title. So if they are somebody who just became promoted to a manager, their billable rate will actually be set at the far end of that spectrum. So like say they were making, round number, like $50,000 a year, but like someone who's been in that role for a couple of years may make $70,000. We'll price their billable rate towards the $70,000. So we're not having to rework those numbers at any given time. So yeah, it's been eye-opening. And I've had to do a lot of shifting on the back end again to make sure that my senior people aren't doing things that they can pass off to less expensive members of the team. But it was an awesome practice to go through that.
One point of clarification, did you also increase what your retainer fee is to clients, or are you just increasing how quickly they run through it?
I'm increasing how quickly they run through it first, but I'm also looking to see and make sure, like, okay, if this is our real billable rate and this ensures our profitability, is there anything I could do on my side first? That's where we are right now. Can I do something on my side first to make their budget stretch? And I'm honest with clients. I had a great conversation with one of our clients the other day who wants us to do additional work. And I said, okay, that's great. But this person who's been doing a lot of your work on your team, I can't have them doing that much work anymore. We're going to be bringing in some junior people because I'm working for you. I want to do this, but I want to stretch your dollars even further. And people are pretty reasonable. And it's not necessarily like me going out immediately and saying, pay us more. It's more when those conversations naturally arise, I'm armed to have those real conversations and explain to I love you. I love working for you. I think we have a great relationship, but I also need to be profitable. So it's not triggering me like knocking on people's doors yet. That to me, that naturally comes because also I can't be changing my billable rates and then just turning around and like demanding that of my clients because, I committed to the retainer that we agreed on. And unless it's based on the workload, I can't just be like, hey, our price has changed. I don't feel like, I'm sure other people do that, but I don't feel comfortable doing that.
You said that going through this process was eye-opening.
Mm-hmm.
What did you learn?
Well, I learned that my billable rates weren't as high as they should be.
That's an important thing to learn.
I know. I did learn that my blended rate was on target though. So I'm happy that the number that I came up with a couple years ago for our blended rate was on track. But my operations manager and my CFO who were like, listen, you have to price these out at the top level so you're not always changing things. And I was like, okay, well, that makes sense. But I'll do PR for anybody. I'd like to do it for free for everybody because I think it's an awesome part of communication. It's like, I love what I do, but I also have to make sure that I can keep my team employed and keep the lights on and keep a business running smoothly. So it was very eye-opening because there were little things that I wouldn't have necessarily included if I had sat here doing the math. But they also included things like the number of vacation days that somebody's allocated per year, because that impacts how many work hours they are available to do work, which then impacts their billable rate. So there was some math that I wouldn't have thought of.
In pricing decisions, there's always kind of a balance struck between what it costs you to provide a product or a service versus what you think that product or service is valued at by the consumer of it.
Right.
It sounds like you're focused primarily on the cost of providing the service side as opposed to what the market will bear. How do you think about that?
That's an interesting. I don't know. I really like being fair with people because we work with a lot of small to mid-sized businesses who know they need what we do and need to be able to have that kind of support and expertise to get to the next level of growth. And so I always want to be fair with people. Yeah, there are clients out there that, have much deeper pockets for sure. And you can just, all right, I think they'll pay this amount of money and do that. And I get that, but I like to be consistent. So I'm saying the same thing to everybody I'm working with. And so if I can be fair and know that I've built in that profitability, that margin of that I'll get back, then I know that I'm doing the right thing and that I'm not giving, one shop owner one price and giving a corporation with deep pockets another price. Like, what happens if they talk? I don't want to be in that situation. I want to give everybody the same numbers.
Dave, how do you approach that? I know your pricing system is different from Sarah's, but in terms of balancing what it costs you to provide the services you provide versus what people are willing to pay, how do you approach that issue?
Well, I think only about what I think people are willing to pay, and if they aren't willing to pay enough, if I can't deliver it in a profitable way, then I figure there's not enough real demand for it. In listening to Sarah, the way that you're sort of costing out what you need to charge for your people, your profitability is only assured if you're actually selling all their available hours that you've budgeted in the formula. And please correct me if I'm wrong. So you're charging people a retainer X amount of dollars every month.
Right.
And then based on the work you do, you're deducting from that retainer for every hour that people work on the file.
Yeah.
And it's only if we run out of money consistently for 3 months, that you ask them for more money every month. Is that correct?
Yes.
Okay. So what proportion of your clients do you expect to be asking for more money in the next few months?
That I expect me to be asking for?
Yeah, to tell them, hey, we have to bump up your retainer because you're running out of budget every month.
Not many. I probably have that conversation maybe once a quarter with a client.
Yeah. So, I remember when I used to jokingly refer to Costco as the $200 store, and now I can't seem to get out of there for like under $350.
Mm-hmm.
And everything goes up every year. And I've seen so many people get into a trap where they're trying to avoid raising prices or trying to avoid asking their customers for more money. And they feel very good about figuring out how to do that. But then what happens is 3-4 years go by, and then they have to go and ask people for like 20% more money. And it potentially creates a real problem, because then the move you have to make at some point becomes a pretty big move. So it makes me a little bit anxious to hear you do that. Like I review my prices every year,
mm-hmm.
and it's rare that I leave any of them alone. Like I even if I just had move one up by 1.5%, 2%, 3%, I'll make a move everywhere, just because I know that all my costs are going up.
So how do you communicate that to your clients? I'm curious. Like, when we sign a retainer, we sign an annual retainer, and it's not their fault if I price it incorrectly or I've said yes to too many things and haven't put a cap. But most of our clients, we have a cap on the number of general hours that we'll spend on them. So if they do go over those hours, I can be like, hey, listen, we capped you at 25 hours a month, but we're spending about 35 hours a month. Let's have a conversation.
Yeah, I think it's all about communication. And with the way that you do it, I think that you could give people a heads up a couple of months before their annual review. And you could say, based on cost increases in our business, your budget is now going to fall from 25 to 21 hours unless we increase your retainer amount.
Oh, that's an interesting way to approach it.
Because if the hours are costing more and more, your clients are using them more quickly, you're going to have to say, look, we can either cut some of the things we're doing for you, or you have to maintain the same amount of hours, which means increasing your monthly allotment, your retainer. Everything else in their business is going up, and they're trying to figure out how to charge their customers more. This is not going to surprise anybody.
No, it's not. What's interesting about this is like I'm a mid-size agency and working to be bigger. And I will often, talk to current, past clients, friends that work for other agencies about the deliverables that other larger name brand firms charge people for their services, and what are the deliverables that they provide. And what's interesting is that there are a lot of agencies that, won't even have a conversation for less than $25,000 a month. And then you ask the follow-up question like, well, okay, what do they deliver? And it's literally the same stuff that we do. It's just, they have to obviously charge more because of their overhead. We had a situation recently where we've been working with a client for the last year or so. And they emailed me and they said, hey, listen, we really love you guys a lot. It's been an amazing experience, but we're going to have somebody else do this work for us, who is a lot less expensive than you. And, I replied back and I said, oh, okay. Well, because I thought that we had pretty good pricing and was fair. And I said, are you going overseas for this support? And they said, no, we are working directly with a person who's just starting her agency and, will give us a really good price on it. And it made sense. Like that person is a single contributor and has no overhead. So they probably, charge a lot less, get a, vanity name on their website to grow. And I can't compete with that. But thinking about pricing structure, a lot of these, there's an overhead and there's a vanity metric. So like coming to Segal Communications, you're definitely getting value. We've been described as solid by most of the people that know us. But when you are a larger brand, if you work with one of like the Fleshman Hillards or the Edelmans of the world, there's this, it's almost like a vanity metric. Like, oh yes, our agency is this big global agency, and we're paying this price tag. There's an impression value as well, I think, that they get out of that.
Do you look to see what other agencies that are closer to you in size are charging?
With friendlies, yeah. Like we have those like kind of light conversations. But most agencies do something similar to me, but like pricing's a really sticky thing for agencies. There's no perfect math. I mean, it's the same with lawyers. Like you may pay $600 an hour for one lawyer and $200 for another lawyer. Like, how does that math work out?
Well, you might also pay 30% of your settlement for some kind of major lawsuit.
Yeah.
Right? Like there's way different ways that you could decide to charge for this stuff. Like, what's the value of you getting someone into, a big newspaper article or something? Like,
I know there are some agencies that will take equity, especially with the startups, where, okay, you don't have enough money to pay us, we'll take equity. I'm actually talking to a client who doesn't have enough money to pay us kind of on the up front, but they do these big events with ticket sales, and we're considering working with them to take a part of the payment on the back end as well. I mean, there's a lot of ways to get paid for sure, but no, agencies generally are kind of close to the vest in terms of sharing that information.
Liz, you sell an actual physical product, not a service, of course, but you too have to think about the cost of putting that product together versus what a customer is likely to pay for it. How do you balance those things?
How do you price it? Like, obviously, the labor going into building it, the actual components that needed to build it.
The tariffs you have to pay.
The tariffs you have to pay. Is it based on what you think people will pay for it? Or is it like built based on math that goes into each particular kind of product?
So, Sarah, I hate to say this, but my pricing strategy is so much easier than yours because yours is about quantifying the value of your work. And I have to somewhat do it, but I have a big, large, aluminum cabinet. It's understood that it's well designed and I know how much it costs. So my pricing is really based on what the markup is. We, of course, look at the market. But if I were pricing according to what my competitors charge, they have a much lighter duty product. It's not going to last as long. It's made out of steel instead of aluminum. So those are factors. I mean, I definitely do get price objections, but it's a little bit easier for me to calculate because I'm looking at a product, not a service, and I'm applying a markup to that.
Do you provide discounts for larger quantities? So like say you're working with, the city of Albuquerque, New Mexico, and they're like, we want 100 enclosures.
Yes.
Do you discount that?
We definitely do.
And how do you do that?
So it depends on the volume. So right now it's like the biggest discount you can get is 20 to 25%. And that's if you buy more than 16 modules. So it's actually pretty easy for municipalities to get that discount. It's something I probably should really look at because when you're dealing with large purchases like that, if the cutoff is only 16, then it's not really a high threshold to reach. But that's how we do it. I mean, if a municipality wants to just buy a couple, they'll get less. If a property manager wants to buy in higher volume, she or he needs to purchase it at the same time. They can't just have a rolling 20% discount. It's only if they buy them together. And we developed that policy because there were a lot of them that would say that they were going to buy more and then they didn't. And then they basically ran off with the 20% discount when they otherwise would have gotten 5%.
I want to move on to something else. But first, Sarah, you do your pricing in multiple ways in the sense that you have the conversation with your client about the monthly retainer, and then you're also charging based on billable time. You could change the billable time factor without your client ever even knowing it. Does that ever come up in the conversation with your clients?
The billable to like how many hours we're going to work for them?
And what you're charging per hour, which is what I gather you just raised.
Yes. We include in most of our contracts how many hours we're going to be working on a client. And that's based on me looking at the billable rates of everybody. It also just helps me. I find that it's an easier conversation to have with clients if we're like, hey, listen, we're spending a lot more time on you than we're contracted to do. Like it's a more, they can wrap their heads around that number where it's just hours, because they don't want to know that one of my account coordinators costs X and my vice president costs Y. Like they don't want to know all that.
But they also probably have no idea how many hours it should take to do the magic that you do.
When we're talking to a prospect, like the conversation is like, all right, what do you need? What do you need help with, right? What are you doing that you need to offload or do better with and working with an agency? Like, what's your utopia? Then we say, okay, well, what's your line item budget? And sometimes people come back and they're like, I have X amount of money to spend per month. And we say, okay, that's great. Based on everything that you said, we're going to make a recommendation on what you should start and what we can do for that particular budget. More often than not, people come back to us and they say, well, I don't really know what it costs. I don't really know what I want. Can you give me a menu? And in that case, that's where the hours come in, where basically we look at our blended rate, or we kind of, if it's like a purely social media client, like we look at the blended rate for that team and we go, okay. And we compare it to other clients. Like, all right, that beer company, we run their social media. We spent probably about 25 hours on them a month consistently over the last year. This is similar. This is how we're going to price it out. And that's the recommendation that will, give them all the different price ranges, but it will be based on reality of similar clients. So we do have that benefit of being able to look at similar work, similar hours, similar clients, because we log everything, that we can actually make real comparisons.
So then you are not charging by the hour. You are charging a retainer fee. From the customer's point of view, you're saying, we're going to do this for you, and here's the monthly cost.
You pay $5,000. It's like, how much did it cost for Gaia, Gabriel and Whitney to work on your project this month? I need to know that.
Right. So if the person thinks that you're working for them for $5,000 a month to do all the things you're doing, then you definitely need to be having an annual price increase. Because from their point of view, they're buying a service, a set suite of things, and they're paying X dollars for it. From your customer's point of view, it's like your cable bill, right? Like I pay X amount for this many TV channels. Everyone expects it to go up every year.
Yeah, but we're telling people how many hours we're working.
I don't know if you should.
Well, it makes the conversation easier. No client wants to ever hear that you have other clients. So you can't be like, well, we're spending client on you and we should be working on other stuff. If we can be clear of like, hey, you've gone above your 25 hours a month for the last 3 months. Let's have a conversation. It's just a much easier dialogue, in my experience.
Sarah, do you ever share with clients how they can more effectively use your time? So obviously you probably have clients that sort of get in the way of things or are not keeping things going along, or sometimes probably bottleneck, which has cost to you.
Yeah.
I have vendors that probably should talk to me about that, to say, hey, these 3 ideas sent us down, a tangent. And I am aware of sometimes how I'm spending an agency's time. So I guess it's a question of, have you ever had a frank conversation with a customer to say, these are some things that you shouldn't do if you want to make sure you keep it under this amount?
It's less about that in terms of like the under the amount. It's like, hey, what's going to have the most impact for your business? If I'm looking at a local spa and they want us to do media, PR, social, influencers, I know that most people that are discovering them are probably finding them on social and probably finding them through influencers going there. And I'm going to say, hey, listen, the media side of it is important because it's the third party validator. It's important. It helps you be searchable in AI and all of this stuff. But I think that we spend more of our attention there. they know that out the gate. Like we put together plans and go, hey, listen, we had a conversation with you when we're talking about working for you, and this was your wish list, and these are the things that we think are going to have the best return on investment for you. And so it's kind of an ongoing conversation. In terms of them asking us to do things that are just a time suck, yeah, we absolutely have had like conversations where we're like, you're asking us to do this stuff, but it's not going to deliver anything, and we can't track the value of it. And so it just kind of goes into the abyss. So we've had to have those conversations for sure.
Next topic. Liz, this is the first time you've been on the podcast since the Supreme Court ruled on the tariffs. I just want to quickly ask, do you have any expectation at all that you're going to get a refund?
So I will get a little bit of a refund. So I paid $400,000 last year in tariffs. 90% of those are for Section 232, which is the tariff on aluminum and steel. And that is applied regardless of the country of origin.
It's not the reciprocal tariffs that the Supreme Court ruled on.
It is not exactly. It's not the reciprocal tariffs. That was a separate category. I was exempt from the reciprocals because I was being tariffed on 232. I am going to get a little bit back because I was paying the fentanyl tariff when I was doing more manufacturing in China. And that was also knocked down by the Supreme Court ruling. So I'm going to be getting about $23,000 back on that.
You sound very confident. There's no procedure yet that's been determined. Has something convinced you that there will, in fact, actually be refunds?
I think that it's going to take a while for them to iron out the process, but I do think it's going to happen. And maybe the reason I'm feeling more confident is that it's only $23,000 out of the $400,000. And if I worried about that $23,000, it would take away my energy and my drive. Like I could have over a year had a lawyer, a trade attorney on retainer to help me navigate this. But I realized pretty early on with all the changes that it really was not a worthwhile expense, because in some cases I knew faster than they did about what was going on because I had alerts set up on my phone for the word tariff. So, I think it's eventually going to come, but for me, it's sort of like, I don't know if I'm going to get it back, but I'm also not worrying about it. I mean, many of my friends who were in the reciprocal category failed. Some of them even needed to abandon containers when they were on the water. When China was at 150%, I knew a lot of manufacturers who just abandoned their containers or they rerouted it. So they have a lot of money that's due back to them. And I really hope that they get it. But my energy is not going to that because it wasn't as significant as an expense for me, like the Section 232 for aluminum and steel.
The other category that represents the bulk of the tariffs that you did pay, is that being challenged in court at all? Or is there any possibility that goes away?
That is not being challenged. That has been around since the 60s. It's about some sort of national threat due to economics. It was rarely used until the first Trump administration. As we know, the Biden administration kept it on, the 25%. And then Trump raised it last June to 50%. So if anything, I'm a little bit worried that the revenue that they're losing from the reciprocals, they may try to get in Section 232. You don't hear people talking about the aluminum and metal tariffs much, but I do remember on one of these, like Meet the Press or Face the Nation, whatever those Sunday shows are, they had the Treasury Secretary say something like, we're going to be looking into other categories, such as metals, to increase tariffs. So, it's in my mind that it can happen. I don't think it's going to be challenged because no one has really tried. I mean, maybe there's some in the lower courts, but I've never been asked to sign a petition against the tariffs for 232 as I was for the reciprocals.
On another high-profile front, I think it was the last time you were here that we talked about how your Venezuelan installers who are here legally are nonetheless reluctant to travel by van to do your trash enclosure installations. But they were, at least at that point, quite happy to travel by air where they saw no risk. Of course, that was before ICE started showing up in airports. What has that meant for you?
I have been watching the news really closely to see if there are, articles about detaining, arresting, harassment of immigrants in airports. And luckily, it doesn't seem to be a big thing yet. However, I do not want to take the risk with any of my employees who we normally would fly anywhere someone was willing to pay for their installer to come, we would go. So I had one installer that frequently traveled to California by air. He's not going to be doing that anymore. So that's a change. And now it's just better for me to remove the risk by hiring local installers. It means that the timeline on us training our national installer base needs to speed up. But, none of my employees right now have any plans to travel. And that is even without any news saying that there's reason to worry. Why take a risk? I'm not going to have them travel somewhere where they're going to feel unsafe. Interestingly, we recently got orders from Washington, D.C. and Minneapolis, both of which have the highest prevalence of ICE in the whole country. We had already made the decision not to send our installers by van to any other cities. But with Minneapolis, we're like, well, that's an easy decision. We're definitely not sending our installers to Minneapolis. If you're a brown person in a work van, you are a target. It just is the truth. And we're going to be hiring people locally. Also in Washington, D.C., we have an order to fulfill there. There's a high presence of ICE there. Same thing. We're going to hire someone local to do it instead of having our guys travel now by van or by plane to other places.
Liz, that sounds like a big challenge for you to hire installers locally and have to train them and have to find people who are not at risk of getting caught up in an ICE action. How are you approaching that?
So we have connected with a couple of companies that just do installations. So installations of furniture, of all manner of, let's say, equipment for stadiums and events, where there is a skill set around installation. And so they have a network of installers nationwide. There's 2 of them that we've been working with great success. They do cost more than our normal installers do, but it really is a part of scaling. We did in the beginning try to find individual installers in individual cities, and that ended up being really time consuming. And then that sort of puts the pressure on us, A, to hire the right person, B, to train that person, and C, to follow up and manage them. It's better to hire someone else to do that. And that's what we're going to be doing nationwide for the foreseeable future.
Is training a big issue?
It's actually not, because our product is so well designed to be modular and ready to assemble. They come flat packed.
Nice.
And we have an installation video. It's very straightforward.
Liz, you indicated that you've also had some interesting dealings with your vendors. Tell us about that.
Yes. So I'm in a really good place right now with vendors. And I've been thinking about it for a while, because there have been times when I've felt very unstable with vendors. And so for me right now...
What do you mean by that, unstable with vendors?
So during the pandemic, the warehouse that I was in, I had a couple of just gigantic orders that came in, and they tried to change the price of this third-party logistics warehouse right before they were to go into the warehouse. So they came from the dock of New Jersey, and they're in the parking lot of the warehouse waiting to get checked in. And then I find out that the price has been increased like double. In that moment, I had all these containers in the pandemic when product was not moving that I was going to pay rent on that was double what I had thought. And I really feel that that was sort of extortionate. I think he may have been doing it on purpose. Contrast that with a couple of weeks ago, we already have a warehouse that's on our complex in Brooklyn. It's called Industry City. And we needed overflow space because we have 5 containers coming this week. Huge, a lot of installations. So we had wanted to increase our warehouse at our current space, and they were trying to get us to sign another 5-year contract on another space. We went back and forth with them a little bit. And then finally, I found an alternative warehouse where I could have gone month to month. And I luckily ran into the number 2 in the complex that we're at. And I said to him, look, tomorrow I'm going to be signing with the Army terminal, which is a half a mile away. And I'm going to start paying them $9,000 a month. I would rather that you took my money. I would rather that I could just have my month to month here in this complex. He took care of it the next day. We were able to easily receive our containers this week. It's literally in the same building as our current warehouse. And that was the opposite feeling as I had 5 years ago when I was in a warehouse where they had a really good ability to extort people. On this one, they're incredibly accommodating. I would have had 3 rent checks going out before, but now I have my office, my first warehouse, and my overflow warehouse all within one check to Industry City. And both economically and geographically, it makes so much more sense.
So what's the lesson from that?
First off, you need to know how important that vendor is to you. So my biggest vendor is my factories in Asia. That's where most of my money goes. I have total trust with them because I've worked with them for 8 years. If that relationship felt unstable, that could throw off a lot. So I've got that relationship that's really good. I've got my rent situation really good. And so I think the moral is if you look at the categories of spend you have in relation to your total expenses, and you can see those vendors that you're writing the biggest checks to, make sure those are good relationships. And if they're not, work on getting something else, because that's too much hassle to have a vendor that is not a good fit for you. And sometimes you don't realize it until you feel that you're in a bad vendor relationship. It's almost like any sort of relationship, but man, did I take action on that, and now I'm feeling really good.
On kind of a similar note, Sarah, I know you recently had to fire a couple of contractors. I think you hired 2 and fired 2 over the course of maybe 2 months. What happened there?
Well, I'm not going to use the word fire because it was prompted by budget. But it's interesting that someone a long time ago, look at your team and always look at them. And if there's somebody that you wouldn't miss if they left, it's probably somebody you shouldn't have on your team. And so I hire fast, fire fast. And I used to not do that. You can tell if somebody is not going to be a fit in general, because as my agency grows, I need people that are going to deliver 200% and are invested in the business and really love what they do. And I can't be chasing people down. That's not my job. I hired 2 people who were supposed to be, they ended up being more work than help because I was having to chase them down for updates. And I needed to make a change because of a particular client was leaving. And so I had to make cuts. And so it was an easy cut to make because it was, I would say 75% because of budget and 25% because they weren't the kind of person that was helping me move the agency forward in the way that I wanted to do it. I mean, three years ago, I shared this on the podcast. I had a couple clients leave and I was devastated to let my team go because I really enjoyed all of them.
And you were letting some senior people go then too.
Yeah. The first time you do it is awful. But then there's this weird feeling of relief that you feel after you've done it. So to get personal for a second, my mother had cancer and she languished with cancer for about 5 years. And it was such a terrible time. And there was just this, when she did pass away, there was this weird feeling of relief that set in after that. And it's kind of the same way when you're making these hard decisions. I get that same sense of, okay, I did it. It's done. It's for the best.
What determines whether you are working with an employee or a contractor?
Well, I love some of the contractors I've worked with over the years. They're not invested in the same way. And they shouldn't
Well, they're
be.
not paid in the same way either.
No, they're paid more, Lauren.
Well, they're probably not getting the same benefits.
They're not getting benefits, but they're paid more. to make up for that benefit. So yeah, like,
but they're also not in your full control, or they're not really contractors.
Like you can't make them come into things. You can't make them like, there's a lot of rules, and especially in California, there's a lot of rules.
So how do you determine that they're not as invested as they should be, given that it's a relationship where they're not expected to be fully invested?
Because they behave like a waiter. Like there's a certain level of employee that where you expect them to think ahead of the client. Like, and that's why you hired them, right? And so we cannot be reactive with our clients. That's not our job. We can't wait for them to be like, we need this done. Here, go do it. We're not waiters. So
if you're paying them more, why are you hiring contractors? Why don't you hire employees that you can control fully?
That's the chicken or the egg question, right? Do I hire people before I have enough retainer money coming in to justify their full-time employment? Or do I stretch my current team so thin that their heads are going to explode until we have enough money to hire somebody? And both ways suck.
Dave, is this an issue for you?
Well, it has been in the past, but I think I mentioned it on the podcast before, I had somebody in November just stop showing up, an employee. And so
awesome.
I was literally ghosted by this person.
Quiet quitting. But that's less quiet. That's just like, boom.
Silent quitting.
Did they file for unemployment?
No. And they ultimately resigned because I had someone else on my staff actually reach out to their wife's place of employment. Because this person wouldn't respond to text messages, emails, or anything. So I knew where his wife worked, and I asked my assistant, hey, reach out there and find out. I thought they had a car accident or something. Like, I was really worried. And because it's a remote situation, right? So as soon as we reached out to his wife's place of employment, within 20 minutes, he basically emailed to say he was resigning the position. So that was that. And then that sparked a whole sort of analysis and reassessment of our volumes and the kind of work we do and what we charge. And this is how it kind of dovetails into the earlier conversation with Sarah, because what I realized, hey, there's a lot of time I'm spending managing other people. And I actually, with the help of ChatGPT, realized that for some of the things we were doing, I was actually getting a negative sort of time leverage from some of the employees, because I was spending as much time helping them and teaching them and working with them and then monitoring what was happening as I was spending more time doing that than some of these things it would take for me to do myself. And so I went through and I did a whole rationalization of what I really wanted to be doing with my time at work, what kind of projects I really wanted to be working on. And then I consciously actually raised some rates to try to do fewer projects on my own, yet earn more money. So it was kind of a redesign that I went through over the holidays, and a lot of help from AI to analyze things like my calendar, just to really know, like, how many hours last year did I spend meeting these particular employees? And, ChatGPT went into my Google Calendar and added them up for me, and I was very surprised.
Are the laws in Canada, Dave, the same as in the U.S. regarding distinguishing between employees and contractors?
Yeah, pretty much. If it, a contractor is somebody who controls their own time, they have their own business, and there are extremes, obviously, like, the person you hired to put new shingles on your roof, obviously they're only working for you for a couple of days and they're off to their next customer. That's clearly a contractor. Someone who shows up every day and you tell them what to do and provide tools, then you're in that gray zone, right? This person's really probably an employee. And, I've got people working for me. Well, this one particular case, the person was here in Canada. They were an employee. So I was, doing income tax deductions off their pay and all the other stuff employers need to do. But I've got people in other countries who are my employees, but legally they're contractors because I don't have a business in their country. So you kind of get into a different series of gray areas in those scenarios.
So Sarah, what happens now? Do you need to replace those two contractors?
I'm doing all the work myself, Lauren.
Wrong answer, Sarah.
I know. And it sucks because I shouldn't be, because I should be working on a new business. I should be working on other things for the business. Yeah, I'm doing it I'm doing what they were doing all myself because, as Dave said, I know I can do it and I'm doing it better. And so I want to do it myself for a little while because I want to right the ship and find out process. And then I need an additional senior person on my team. I can't afford them yet. And so, I'm in this hard place. Yeah, I could hire somebody junior, but then I'd be teaching. They don't have the experience that you literally need this experience to do this kind of work. And so I'm kind of just toughing it out. One of them is a project that will be done mid-month next month. I'm good with it. The other one's for 2 ongoing clients. And I need another senior level person. I just can't justify it just yet, especially it's so freaking expensive here. People are looking for jobs. I don't want to go down the road of a freelancer or a contractor. I did make the mistake of hiring a couple junior people last year on a kind of attempt to perm where they were part-time and they kind of grew into the role. But what happened was they continued to look for full-time jobs. And so they became full-time with me. And then literally one left after the other because they had been offered another position. So the whole temp to perm thing doesn't work out because obviously they're still looking for full-time employment. And if I can't offer that to them, I'm, second fiddle to whatever they do get offered. Yet I can't afford a $100,000 plus salary at this point. I mean, I could, but then my profitability goes down the tank.
This is why you need to raise your prices.
I do. But then, half of my market that I kind of own, that mid-sized business, they can't afford me anymore. And there's not enough.
Are you sure?
Yeah. I mean,
how do you know?
The economy's not so good. There are a lot of consumer brands. We do consumer lifestyle. People aren't going to restaurants as much as they were. There's no tourism in California. So everybody who does things related to tourism, all the international travelers, gone. I'm sure you guys have read about Vegas and now they're suffering. It's less about me going to them and saying, hey, let me raise my prices. It's more them coming to me and be like, hey, can we lower our prices? I literally have a phone call this afternoon with a client that I think is going to ask me to lower their prices.
Is there a way for you to raise your prices even if you lose a few clients and end up making more money?
I don't know. I will sleep on that. That's a big question.
Well, and also the value of your time. So if you're in the weeds, that takes away the time that you can be getting new customers, and those could be higher value. So looking at the value of your time.
Business is hard, eh?
Yeah.
On that note, my thanks to David Barnett, Liz Picarazzi, and Sarah Segal. Thanks for sharing, everybody. And a special thanks to our sponsor. This episode was brought to you by Grasshopper Bank. One thing before you go. Everything we do at 21 Hats is created by entrepreneurs for entrepreneurs to help us all learn together. If you get something out of listening to these podcast episodes, consider joining the conversation. You can do that by joining the 21 Hats Sounding Board, a Slack channel where you can tap the wisdom of a very smart crowd, or by becoming a founding member and joining our monthly Zoom forum, where you can be part of conversations much like the ones we have on the podcast. You can sign up for both by subscribing to the Morning Report. If you have any questions, you can email me at lauren@21hats.com. And if you get something out of this podcast or out of the Morning Report, please tell a friend, tell an enemy, tell every business owner you know. Your word of mouth, owner to owner, will always be the most effective way to build this community for all of us. Thank you. It means a lot. This episode was produced by another entrepreneur, Jess Stuberon, founder of Blank Word Productions. Thanks for listening, everyone.